My man, Eddie. Hey, I'm so happy that we were able to do this. I know we
Yeah,
chatted about this right before I went to that Tom Ferry event. I'm glad I was able to get some free time and then make sure that it worked with your schedule as well to do this.
yeah.
You know,
Appreciate the reach out. Yeah, definitely glad you were able to get this done, and hope the trip was good.
yeah, man, it was really helpful. It was great. I was ready to come back and put a lot of that knowledge and insight that I got to work, for the business.
Right.
And
Yeah.
every single time I see you at an event or when we do an open house, I feel like it's always a positive environment. I love your personality. I love your energy. And that's the
Appreciate it.
reason why I reached out, to do this with you. So, if people, been in Silicon Valley for a while, and I don't know if they've been living under a rock and they don't know who you are, but you are Eddie Garcia, the man, the myth, the legend is what I call you.
Appreciate it. Appreciate it.
And I wanted to start off by having you introduce yourself and how long you've been in the lending space for.
Yeah, appreciate that. Always appreciate the opportunities to support you, and glad that we were connected years ago. So, but yeah, Eddie Garcia, Loan Depot, out of the newer Campbell branch office here in the Poon Yard. And so I've been doing residential lending for over 20 years. Did 10 years on the broker world there, off a little bit off of Campbell with Robert Cardozo University Mortgage broker world. And from there, went to Los Gatos for 2 years on a mortgage bank platform. And then from there, I ended up going to Everbank for a couple of years. And then from there, I went to Wells Fargo for 3 years and left there 2018, went to Citibank for 3 years there in Los Gatos, and left there in January and came over to Loan Depot last year. And so that was, a little bit of a moose, but definitely always with the mind of taking care of the client, right? Because everywhere we went, we always go thinking that this is going to be home, take care of the clients, this is it, right? Nobody wants to be moving around, but industries changes, and sometimes companies change, and you got to make the change for the better for the client, because at the end of the day, it's the clients that we have to take care of, right? The client's best interest, and take care of the client. You got to be referable, and that's our industry, right? You got to be referable to your clients, neighbors, or friends, coworkers. Do a good job. So you just have to have your integrity, say what you're going to do, and communicate, good or bad, preferably always good. But of course, we know in this industry there's some curveballs, things come up that are out of our control, whether it's turn times or guideline changes, or something happens, or the client doesn't disclose something that should have been disclosed to. And curveballs always happen, but as long as we communicate, there's always solutions. And at the end of the day, the people that just want to know what's going on are the buyers and the sellers, right, in our industry, right? And you guys get hounded by, whether it's a listing side of it, the seller's asking, hey, what's going on, what's going on, what's going on? And so you're hounding the buyer's agent, hey, what's going on, what's going on? And then they're reaching out to the lender, right? So it's just about communication, and it's good being with a company that's able to let everybody know what's going on, whether the appraisal was ordered, the loan was locked, everything gets disclosed to the buyer, the buyer's agent, the listing agent, as far as the status of the loans. There's no hidden agenda. You order the appraisal, that's the date. You can't be saying that you ordered it a week earlier, because when it gets ordered, everybody gets notified. So, which is great. But at the end of the day, like I mentioned, it's still communication. You just communicate, whether it's good or bad. Two sides just want to know what's going on, and we got myself and the agents in the middle trying to communicate and pass along the valid information that we need to. Are we closing on time, loan approvals, things like that, right? So I know there's a lot of pressure on the agents to what's happening, because you guys are getting pressure from, whether it's the buyer or the seller, is just wanting to know. And at the end of the day, they just want to know what's going on. Hey, give a heads up. If it's late, ideally we're not late, but if it is, it's not the end of the world. Nobody's
Right.
dying, right? Like, okay,
Yeah.
hey, you might apologize, it's an inconvenience to everybody or whatever. We try to make it right, whether credits or something, right? But at the end of the day, nobody's dying. It's a transaction, and in this crazy market too, it's like 21-day closes, right, or less, right? That's not the norm, like nationally, right? People
Definitely
are
not. Yeah.
country bumpkin. You're over there, 45-day close of escrows, right? But over here, you got to do 21-day close or less, just because, and it just causes so much stress on everybody. But you know what? We've been doing this for so long. That's our market here, unfortunately. We got to close quick, but still communicate and still perform and do everything that we got to do. So, and it's nothing personal. I know that when agents and everybody reaches out, hey, what's going on? What's going on? Or they're getting stressed out and they're having a bad day because the seller's on them, and they're reaching out and making everybody else grumpy and stressed out. at the end of the day, we're all just human and it's nothing personal. It's just people just want to communicate to know what's happening and are we closing and things like that. So for me, doing this over 20 years, like I don't stress the small stuff and I try to explain that to everybody else, like the processes and the buyers, that hey, reassure everybody that's going to happen, it's going to happen, or just communicate everybody what's going on, right, at the best that we can. But again, just been doing this, for so long, 20 years, like I said, over 20 years, and at the end of the day, just taking care of the clients. Yeah.
Yeah. So Eddie, how long were you a solo lender for before you started like getting in more like these team centric styles?
I was solo up until I went to Wells Fargo. I was at Wells Fargo. I did get a sales manager there when I left, and then I went to Citibank, not as a manager, but I went over there as a top producer with the plan to get into that leadership role. But it just, things just happened with the company and then COVID, and it made it difficult being there to service the clients. And so I had to make a change. And coming over to LoanDepot, great leadership. The people that are in leadership and management, I've known since when I was at Wells Fargo, and just phenomenal supporters, leaders, communicators. They have our back and doing what we do on the sales side of things, which is great. And then also the LoanDepot, the technology that we have, the loan LOS, the loan operating system, Mello. It's just very streamlined, very user friendly for the clients. Not to mention another competitor, but just think Quicken Loans, how easy it is. They're number one because of the streamline, the ease of which clients do the refinances, right? They go in the streamline. Same thing with Mello on the purchases. The LoanDepot has Mello, which is the loan operating system. And it's just the interface with the clients, it makes things so smooth. And also for our operations, the technology, it makes things run a lot smoother, the turn times and the processors, and everybody's communicating on the same system. So that technology, phenomenal. The marketing, unbelievable, as far as just being able to be a salesperson and sell Eddie Garcia with LoanDepot for the company, and be out there and support our realtor partners, as you see, right? Like being out there at the open houses or events or this and that, supporting what we did at Top Golf when you guys were on the panel. LoanDepot just gets it. You got to be in sales and you got to support industry partners and you got to be out there. So it's like marketing on steroids for sure compared to some of the other banks that I was working at. And so been doing this a long time. I wanted to get out of top producing and getting more as a team, do less volume, but have a team. And I'm big on motivation and sales and networking. I'm huge on networking, just building relationships. It's a relationship business, period. It's a relationship business. It's a connector business, right? And you got to be genuine. You got to be, again, like integrity. Say what you're going to do, communicate, but just know your stuff. And if you have products, it's going to be an easy sell. But at the end of the day, I enjoy connecting with people and supporting our partners and building a team and having a team and help them do 100 million if they wanted to do whatever. And so I was able to have that. And again, I'm a sales manager over here at LoanDepot at the Campbell branch, and I do have a team that I brought over from various banks. We are expanding and hiring still, so we're growing, which is great because I know a lot of other companies are kind of trying to eliminate some of the overhead and people as well. So, but we're actually expanding and hiring, so which is a great thing. So no worries.
You take the words right out of my mouth, because I was going to ask you what the difference was between a company like LoanDepot now relative to like an institutional lender that you used to work with.
Yeah. I just touched a little bit on that on the basis. Yeah, marketing, it's a lot easier to sell and co-market with realtor partners. Right at the end of the day, we're partnering for business, for clients, and taking care of them. So it makes our job easier. Guidelines, especially guidelines, we're a lot more flexible as a mortgage bank. We're not an FDIC, Federal Deposit Institution type of bank where we don't do checking savings. We're just a mortgage bank. So we have so many different investors that do different things that the big banks don't do. They're a little bit more conservative for sure. So we're like, for example, we're able to do 20% down to a 6.25 million price, where a lot of some of these other banks are cut off at 20. They have to do 25 or 30% down when they get up to above a 2 million loan amount, right? And so, for example, around here, high net worth prices and clients, a lot of people have brokerages. So for them to be able to do 20% down versus 25, 30% down on a $5 million price, is a lot, right? They don't have to liquidate as much and pay taxes on that, and they get to keep that money, right? It's a lot of money
Yeah.
here in the area, down payment, right? And they get to keep that in the brokerage, making money in the stock market, right? So they don't have to liquidate it, pay taxes, and just put it down on the house. So they could do less down if they choose to. We also do 20% down to a 2.22 million price. Same thing. A lot of these engineers, a lot of these buyers, they think, so because of the area that we're at, we have a lot of engineers. So because we have a lot of engineers, we also have a lot of H-1B visa engineers.
Mhm.
So a lot of these banks are a little bit more conservative, and they tell these H-1B visas, say, hey, if you want to buy, you have to do 20% down above $1 million. So everything's being sold around here is above $1 million, right? So a lot of these engineers think they have to do 20% down because that's what ABC Bank, whatever, is telling them they have to, but they don't. At Loan Depot, you can do 10% down to a 2.22 million price, no PMI. 10% down to a 22 million price, no PMI. And again, allows clients to not have to liquidate 20%. They could do liquidate 10% or 15%, still no PMI, keep that money in the brokerage, making money. Or the alternative is, as you know, a lot of these homes that are being sold for 1.5, 1.6 million, they're fixer uppers, right? They're dated and they need some work. Even at a 1.5 million, 1.6, you know, we were in Mountain View for a house for 2.6, and it was a 3-bedroom, 2-bath, your average house, your average track house, and ended up selling for over 3 million. That house needed some updating still, right? And so instead of having to do 20% down, you can do 10% down, keep that other 10% down on 2 million, right? It's 200,000. Use that money to upgrade the kitchen, the bathroom. People are working from home now, right? So where the home office is, or people, they can create an outdoor space, a barbecue area, fire pit, entertaining area, right? They can use that money on the house and make it more enjoyable than having to put 20% down, because they'll never see that money again until they sell the property. So just
Yeah.
a little bit more flexibility in our end on stuff that we can do. We will go to a 50% DTI, debt to income ratio, which means that we'll allow buyers to qualify for a higher price point, where other banks, they're cut off at a 43 or 40% debt to income ratio. And so they're stuck. And as you know, prices around here, everybody, houses are going for 200, 300, 400, 500, 600,000 over asking, just depending on where it's at, right? So this buyer might have a pre-approval for 2 million, but the house is going up, 200,000 more than what they thought. And whoever their lender was, they're stuck at, 2 million. I might be able to get them to that 2.2 million just because I can get to that 50% debt to income ratio. So a little bit flexibility with our guidelines for the buyers that are out here. Whether lower credit scores, we allow lower credit scores, maybe a 680, 660, stuff like that, where a lot of these other bigger banks on the higher price points still require 720, which for the most part, everybody's got 720. But every once in a while, you got some buyers that something happened, a hiccup, whatever, their scores aren't that great. But we just have a lot more flexibility with the jumbo stuff that we have. We do FHA, we do VA. I'm a veteran myself, and I'll transition into that. So I did 4 years. And so I was a Navy medic. I was a corpsman, but I was attached with the grunt unit with the Marines. So I was with the infantry unit with the Marines down at Camp Pendleton. We did a pump out to Okinawa, to Korea, 6 months out there. It was horrible. I wish I could delete that time.
Well, hey, thank you for your service. I was going to bring that up. Thank you for bringing that up before I did, though. Yeah, I really appreciate that. I wanted you to dive in a little bit about that. So I really appreciate your service, and I think that's so important. I definitely
no regrets, but that's 6 months.
Hey, it's a challenging time, man. There's a lot of people that can post certain things on social media supporting the troops, and there's another group of individuals who out there and actually do it. So I completely understand, and it's those are the real tough Americans, and my hat's off to you for that, man. And going back to what you were talking about the loan programs that you guys offer, me being self-employed, this was a big hurdle that I had to deal with when I was buying my own home. And it's so funny because I probably helped a little over 100 or so families buy and sell homes before I bought my own home. And man, it puts so many things into perspective. Like when, folks are like looking for a lender, for example, I said, oh, who do you bank with? Just go through that. Me being self-employed, it was a lot more tricky. And, dealing with an institutional lender was very, very challenging for me. So I'm very grateful that I was able to find alternatives. I mean, it could have literally been the difference for me getting the house and not getting the house. And I was able to get a great rate. A lot of us in the industry think if you go through a broker, if you go through, somebody that's not an institutional lender, it's a significant higher payment. Not necessarily. I've seen rates that are exactly the same as with banks. And it's something I wanted to highlight. After the last time you and I did an open house together, I didn't know that you can do a loan at 10% down with no PMI.
Yeah.
And that's what really got me, thinking like, I got to get Eddie on a Zoom call and record this and just put it out there to the, to the community, just so people know that they have options. And of course, price is so important, right, in today's real estate market, but it's not the only thing that gets the job done. If you can get a 21-day close opposed to a 35-day close, right? And you can get a seller thinking, I'm going to pay half of the mortgage that I got to pay, because I can be out quicker. That can really incentivize them. That can be a big difference between $5,000, let's just say, that you're putting down, right? So if you have the option of being able to, have a close relationship with an underwriter, for example, right? I mean, that can be the difference between delaying escrow and pissing off the listing agent and the seller to, getting the deal done. And I think those things are so important. And I know that you always come through with delivering value, whether it's at an open house or the events that we have. But now I wanted to take some time and deliver some value, to some prospective borrowers in today's crazy real estate market. So you hear a lot of these things, right, with the Fed. Like, I hear initially that we were going to have earlier, before the invasion of Ukraine. I was hearing anywhere between 5 and 7 rate hikes. Now I hear Jerome Powell talking about that, later this month, that there'll be a 25 basis point rate hike. And obviously, neither of us have a crystal ball here, right? We're going off of forecasts. But you being the expert in your field, what are your thoughts? How do you think real estate mortgage rates are going to change through 2022?
First off, and I appreciate that. And I've been, like I said, luckily fortunate enough to be doing this 20 years, and I've seen rates. So right now, everybody's so sensitive about what they are. But when I got in January 2001, rates were above 7%. And I remember when I got into business, it was a big refi boom with Dell & Greenspan when they started dropping the rates. And I remember we're doing loans and locking people in at, 6.875, 6.75. And people were like, oh my God, this is amazing. 6.75, 30-year fixed, and the rates kept coming down 6.5. And they're like, oh my goodness, 6.5, unbelievable. And, under 6%, people's heads were exploding. They're like, oh my God, I've under 6%, 30-year fixed, right? And it just kept going. And then the housing crash happened, and rates, ticked up a little bit again, but then they came back down. And so we've been so spoiled at these historic low rates, and they're still historically low. Just look historically at the Treasury bond and rates in general, they're still low. Like, rates right now are probably hovering kind of where they were, 2018, right? Nobody was complaining in 2018 about what the rates were. People were still going to buy. People are going to buy, and the rates don't matter. The rates are what they are based on the market. It's out of my control, out of your control. It's out of, as much as we want to keep rates low, I mean, it's going to change based on economic data and global things that happen in the industry that affect our markets in the global market. So, but at the end of the day, the rates are what they are. It sucks that you're not getting a 2.25 30-year fixed anymore, and you're going to get, somewhere 3.25, 3.3, but it's still historically low, right? So you brought up a good point where, there's a lot of economic data where there's inflation. The economy is actually doing well considered where it was going, just based on the economic data that's coming out on unemployment, like stuff. All that matters as far as what the Feds wanted to do, right, is raise the rates and to kind of cut off the inflation. But again, the Russia war, very unfortunate that that's happening, but put a hold on what they were going to do as far as raising rates. So they've kind of held steady for right now. They dropped a little bit, come back up, but the market is so volatile. It's been going up since 2020. It's been ticking up since 2020, the lows, and then 2021 came up, and then they really started to come up in end of a little bit before Christmas. That's when they really started hiking up, and then February. And so, we're right now, but rates are still low. They'll probably stay like this probably throughout the year. I would guess. In my opinion, again, that's not LoanDepot's views, whatever. Just what I've kind of been experiencing is the Feds, the inflation, and everything else, the war, there's gas. I mean, they just can't hike it so much where everything is expensive. So, but it's so volatile right now that any little thing just triggers, making that changes in opinion. So it's a day-to-day thing, and rates change daily. And that's one good thing I want to say. So just because a lender issues you pre-approval today based on today's rates change daily, sometimes twice a day. It depends on what's going on with the market. So what you got today is going to be different from tomorrow, from next week, from a month from now. So whenever anybody gives you a pre-approval letter, the rate on that pre-approval letter is worthless. It's whenever you get into contract. Well, that's another good thing. So whenever you get into contract, normally is when you can lock it in. We just rolled out a 90-day lock-in shop, which is kind of cool. So even though you're not in contract, because rates are ticking up, Loan Depot will allow you guys to lock in for 90 days. So you lock in your rate, go shopping, find your house, right? And you got your rate locked in.
Nice.
There is a float down mechanism in that, just in case the market crashes again or something happens. There's the tool in there to be able to do a float down, but we do a 90-day lock and shop. So even though you're not in contract, we'll allow you to do that. And so prior to that, most lenders are going to require you that you're ratified contract, you're in contract, you got the address, and then you can lock it based on that day. So
okay. So if people are thinking that the rates are going to increase, right? I mean, it's a great thing to do for them. It's like, yo, we can get you locked in for 90 days.
We know,
right? You can just
we know that the rates have been increasing. They're going to increase. They've been going up.
Right.
The feds, they wanted, like you heard them like 5 to 6 times this year alone, right? So we know rates are going to increase, right? So right now they're just kind of holding tight for right now. But yeah, exactly right. For people to be able to lock in right now versus 6 months or a year from now, because that'll make a big difference on their payment as well, right?
And I think it's really important, right? In today's, I'm sorry to cut you off there, Eddie. I was going to say, I think it's so important in today's competitive real estate landscape, right? To be able to have like a team, right? To be able to talk to people at any point, right? Just to make sure that these deals are done. I mean, in today's market, I've noticed that at least I've been grateful enough to get my clients a lot of these preemptive offers accepted over a weekend before they're looking at offer deadlines, right? Just by incentivizing the seller somehow. Now, we won't have to go into that right now, but the point is, when you have a team, right, centric, ready to get your offer accepted and get you the home that you're looking for, I think it's so critical to be able to partner with people like that. And I love the fact that you and I can, do a deal together on a Saturday. We can talk on a Saturday, right, make that stuff happen. And I think that's so important because some lenders that I've come across in my time prefer not to work weekends. And I mean, for someone like me, like that's a no-go, because you have to be able to do it. Real estate doesn't sleep, right? This is a 7-day-a-week business.
Even you're on vacation, still working. Yeah, there's no vacation time in our business.
Right.
We want to like take some time off. It's just, you got deadlines and contingency dates and you got to meet them. So yeah, you're right. And yeah, I'm married. I got 2 kids. My son's 15, my daughter's 11, and I've been doing this 20 years, but you're right. It's just the weekends and open houses, and that's where you get your buyers, your hot leads, right? People are at the open houses and people are coming through. You're not having to go cold call or door knock, whatever. You're at the open house and people are coming through. That want to buy. They want to buy. So yeah, it's connecting with those people there at the open houses. Unfortunately, it is Saturday and Sunday. So, but yeah, you got to get your hustle on. Been doing this a long time, but you still got to grind and make it happen for yourself. We're all, we have our own business, self-employed, even though I'm W-2 for the company, but it's still, 100% commission, and we work for ourselves and we get what we put in.
Yeah, and I remember seeing on social media when you were doing that like beautiful remodel of your home, and for a long time you were like in the little man cave in the ADU, and you were hustling. You didn't have a dishwasher, you had like nothing, and you were just out there grinding. And I would see that and I was like, see, that's what I'm talking about. Like, I just love, who my father is, so yeah. I love seeing that type of like, no excuse, the job has to get done, because that's what I was raised around, right? So when I see you like that as well, I'm like, man, this is great. Like that's a success, for that's a winning code for success. And I got this little graph that I wanted to share with you. This was from a marketing vendor that I subscribe to, and they had mentioned about the best investments that you can make. I mean, this is from consumers, right? Consumers have voted on this, and real estate was at 41%. Stocks and mutual funds were at 26%. Savings and CDs were at 9%, and bonds were at 3%. So this goes back to just the return on your investment, right? And us trying to focus on our futures and being mindful of that, and try to invest for ourselves and our family. And time again, at least over the past 10 or 11 years, real estate has come out as number one. And I mean, we live in a very, like you said, an engineering-centric, tech-centric area in Silicon Valley with stock prices soaring, right? But real estate has still come out as number one. So when people are like, man, well, Nima, I don't have 20% down, so I can't buy a house. I got to wait. I'm going to miss the boat here. knowing that folks like you have these types of options where you can put 10% down and you don't have to liquidate those stocks. You can keep that money as a rainy day fund. You can save that money for improvements like you had mentioned, or hey, I mean, invest it elsewhere. But the point is that there are options out there, and I feel like a lot of people think that they need to put at least 20% down to be a homeowner in today's market, and that's just not the case, right?
Right. And we actually this month we actually rolled out to make it even easier on the jumbo. So you got conforming, you got jumbo stuff. So a lot of times the jumbo stuff, the world that we live in here in Silicon Valley, it's everything's jumbo, higher loan amounts, tighter, a little bit tighter guidelines per se, and you have to do a larger down payment. But LoanDepot, we just rolled out a newer product. So we'll even do 5% down, no PMI, to a 1.75 million loan amount. So that takes you to like a 1.8 some change, whatever that is, purchase price, 5% down, no MI. We'll do 3.5% down, even jumbo, to 1.5 million loan amount.
Nice.
So that 1 point, whatever that dollar amount price point is. But so again, down payment, we know around here, I was laughing with a coworker because he reached out to me and said, hey, what's the price point, blah, blah, blah. Or for another friend of mine with another bank, he's like, hey, what's the price point for 800,000, blah, blah, blah. And I kind of told him what the rates were, and he was telling me what his rates were. And he was kind of, he might've been like an 8 better, or maybe a little bit more credit or the same. And he was like, haha. I'm like, hey, you know what? I just got this buyer for 4.3 million, and he's putting down $1 million. He's like, your price point's like the amount of his down payment. I'm like, so I kind of got him back in the sense that, the volume that we have to deal with over here on this end, it's good and bad. It's good for the sales that we do, but it's kind of scary because your regular buyer, your first time home buyers, your traditional first time buyers, right, where like they're struggling with income or down payment, like you mentioned, have to compete with what's being sold around here. And so it's kind of a challenge for buyers, right? And so one thing that we try to help out as far as getting, of course, a pre-approval, but at a minimum do a pre-approval. Like we like to try and get it to where we actually submit a file to get underwritten by an underwriter. So we have a credit approval. We know that they qualify. We know what their max qualification is, whether it's, $1 million, 1.5, or 800,000 or 400,000, whatever that price point is. This way, when they're making offers, they can make the offers with no loan contingencies. No loan contingencies, 21-day or shorter closed escrows is going to help their offer get accepted versus somebody else that still has a 7 or 10-day loan contingency. They need a 30-day close of escrow, right? The seller is going to choose somebody that's already been approved, underwritten. And so we can definitely help facilitate that. And so I think it's just important to get your buyers with the lender, somebody, a seasoned guy that knows the different guidelines, that can let them know all of their options, right? It's not up to me to tell them that they need a 30-year fix, or you need a 10-year ARM, or you need to do 20% down. That's not my job. My job is to say, hey, buyer, client, this is what you qualify. These are all your options, A, B, C, D. What makes sense for you for your short, long-term goals, right? And then once they decide what's best, then get them fully approved for that product. That way they can get into contract, right? Because we know how hard it is here with the amount of inventory. It's just there's no inventory, so it's a challenge for sure, right? So when you're making offers, as you know, you got to get it going there strong and aggressive with these offers. And with these buyers that are first-time buyers, it's unfortunate because they don't realize when they're making 1, 2, or 3 offers that they got how much above they have to ask for, right? Because sometimes some people think that, they want 1 million, I'm going to offer 900,000. It's like, no, that's not how it works around here. Not for a while, right? And so it's not until the first or second or third, fourth time that they've gotten outbid do they realize, oh man, I got to step it up and I got to really, and I'm sure you tell them from the get-go, hey, this is the price point, but it's going to go over 200,000. The clients are probably like, oh, Nima, you're crazy, and we don't want to do that. We're going to offer 100,000, and that's like, that's not going to win. But you have to do it anyways because you represent the buyers, right? And it's not till the third or fourth time of failing and not getting that offer accepted do they finally listen, right? Sometimes, so it's
right
for a lot of these buyers around here. But you got to come in hard and strong, man, with your offer. So definitely, it makes a difference who you're working with, for sure, as far as like yourself, seasoned professional with the reputation that you have with your family and everything else, to who knows this market, and with the lenders as well, that to make sure that they have an underwritten approval, that they have the options, and that you're able to close and get the results and everything else. So Yeah, definitely it's a challenge for buyers right now, 100%.
I think it's, when you have that type of cohesiveness with a partner, with a lender partner, where, you guys know each other, you guys work well together, it can really be I mean, if you're to use a baseball analogy, if you're a baseball fan, it's like a second baseman and a shortstop working together, to make sure, right? I mean, you have
That double play.
communication. You know what I mean? It helps so much. And I've seen it, I have, just like there's, folks like you and a few other lenders that I've worked with for, and I just have a great relationship with them. And I feel like that cohesiveness really helps, and especially in today's market. I tell folks, like going back to what you said about how the purchase prices go significantly higher, especially for these single family detached properties that we come across. I tell them, look, there's no bargains in today's market. I'm not here to find you a bargain because it won't happen. I'm here to make sure you win, right? That's the difference, because I want to set it up front. Like, I'm not going to promise anything. And I think full transparency is so important, similar to what you were talking about. You find out what they're pre-approved for. Like, look, we have these types of options for you, and let's choose the best one that fits your needs, right? Just to be upfront and transparent with them how today is. And I just think it's so crucial, right? Outside of list price, I'm sorry,
Yeah.
selling price for a home, just being able to have a shorter escrow duration, getting that underwritten approved loan, making the offer as clean as possible. These are all like a lot of important things that, most agents, I feel like, don't really address as much as they should, because it can be really a big difference. And I know I've been known for getting offers accepted that wasn't the highest price, just because, I offered a few incentives, or, it was a lot more clean, than it could have been. I remember when I was shopping for a loan for my property, the bank that I went through told me, like, okay, so we are required to tell you that we have to put a 21-day loan contingency and an 18-day appraisal contingency in your offer. So, and I told them, like, so you basically are telling me you don't want me to get the house. That's basically what you're telling me, because there's no way that that's going to get accepted. And the market that I bought my house in was a little cooler than it is today, but it was, towards the beginning of COVID. And these rates, it's just so crazy, right? Like, I remember in January of 2019, I think the rates were hovering close to 5%. A year and some change later, they were down to 3% and under 3%. But even today, right, as they're ticking up higher, closer to 4%, if you still have that 3 in front of your loan number, it's still a historically low rate. Like, right, as you've been in the industry a lot longer than me, you're a seasoned vet of 20 years, right?
Yeah.
I mean, we haven't seen rates like that in a while. So I think that people should still be mindful of that. Yeah, like you said, you're not getting a 2, 3, 30-year fix. Yeah. But there's still historic values, right, relative to what rates were pre-COVID.
I think since January, since that initial rate hike, the way things kind of went up quite a bit compared to where they were. I think as these buyers call and they shop and compare, I think they realize that somewhere in the threes is what it is. There's not going to be no kind of under 3% for the most part, right? Unless there's relationship pricings or just something other. But in any given day, there might be something that where they can get it. But for the most part, yeah, they realize, hey, we're in that 3% range now, and it's sinking in with them. Like, okay, this is the norm, and they're not fighting it. But once they get into contract, like I said, you're in contract and you have to close in whatever amount of days. This is the rate. Lock it in. Rates are still going up. You're good. Lock it in. Close it. They're happy. Close on time. The whole process is like giving birth in a sense, right? It might be painful or unsure of. Ideally, it's smooth, but once they get their home keys, they're happy and they're
start making them that equity, right?
Yeah, exactly.
So, Eddie, I really appreciate you, man. Thank you so much. I've been wanting to do this for a while. Like I said, where can people find you? How can they
my cell number 408-398-2267. My website www.loandepot.com/EG. My email is eg@loandepot.com. So
that's always easy for me to remember.
Or they reach out to you and say, "Hey, buddy, send me over to your preferred lender."
Yeah, definitely. And what's your I don't remember off the top of my head because my phone's across the desk over there, but your Instagram handle.
_Eddie Garcia. _Eddie Garcia.
Okay. All right, my man. Eddie, thank you again for doing this. Thank you for your service to this country. Absolutely. And I can't wait for us to do our next open house together.
It's appreciated by your time. Thank you so much.
My pleasure.